Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is November 4th, 2025, and today on our call, we have the CEO, Mark Tadros from Stardust Solar Energy. Stardust trades on the TSX Venture Exchange under the symbol SUN, SUN, and it also trades on the OTC under SUNXF. The company is currently trading at 10 cents with about 89 million shares outstanding, or about a $9 million market cap. I'd now like to hand it over to Paul Andriola.
Trevor, thanks a lot. Mark, last saw you at our conference. Appreciate you stopping by and being part of the conference. It was good to see you there. Stardust Solar, relatively new company. You haven't been public all that long. By the name, I think we have a good idea of what you guys are all about. Of course, I've got probably a better idea of what you guys are about than some of our audience, but you're here to fix that, make sure everybody knows about the business. So again, thanks for joining us today. You got your presentation. You're ready to rock. I'm going to turn it over to you.
Awesome. Okay. Thanks, Paul. Thanks, Trevor. Appreciate the introduction. And thank you to everybody on the call for the opportunity to present. I hope you'll find our business compelling and quite easy to digest. So Stardust Solar is North America's largest solar franchise business. The idea, the concept is quite simple. We're a franchisor, like a classic McDonald's business model, or maybe a Mr. Lube. A Mr. Lube of solar is a closer comparison. So our franchisees are in the field installing solar panels and energy storage on residential and commercial properties. So again, a very classic franchise model where our field workers, our installers, are actually owners of franchises in their local regions and are participating in the growth of the brand, not just North America wide, but now worldwide. So I'll dive into the presentation and start by just talking quickly about the solar energy market. I think it's really important to start there and recognize how important solar energy will be for the future of our world. The continuous demand on the grid, the electrification of vehicles, expansion of AI technologies, cryptocurrencies, robotics, all of these technologies coming to the forefront are going to be a demand for energy. And this is part of the solution. Rooftop solar is a simple solution to provide energy independence at a building level. And what that does is it takes away the demand from that building, from the grid, and it'll give the grid the opportunity to sell its energy to these emerging technologies. So it's, again, just supply and demand. There's going to be a huge demand for energy, and rooftop solar will be part of the solution. Now, as far as solar technology itself, the cost of solar has come down 74% in the last 10 years. But while it's gotten so cheap to buy solar, it's actually increased in output by 58%. Now, that inverse relationship between the cost and the output of solar has created an ROI for business owners and homeowners all across North America. And that's a really important concept for our discussion today. That's what's driving the industry. That's what's driving the adoption of solar. And the last statistic I'll give you here is today, solar is 6% adopted in the US and 1.5% adopted in Canada. The Department of Energy says that number will be 15% by 2035. So in just the next decade, we'll see the entire market triple in size. So who is Stardust Solar? As I mentioned in the opening slide, we're North America's largest franchisor, and we've been trading since October 7th, 2024. So it's been now 13 months we've been a public company, and we came to via RTO with a CPC out of Quebec called Bold Enterprises. That qualifying transaction brought us to the markets. And as Trevor mentioned, we're now trading on the TSX.V under ticker symbol SUN and the OTCQB under SUNXF. Today, we have 102 franchise territories in our network, and we're scheduled or we're forecasted to reach 5 million in revenue by the end of this year. Shortly after we listed in 2024, we completed an acquisition of our largest counterpart in the US. We did a merger with a company called SolarGrids. This instantly doubled the size of our company and onboarded 49 US territories. Now, this was a big part of our expansion plans for the US, automatically gave us traction in the market, and it was reflected in the revenue growth that you're seeing in 2025. 2024, we finished with 3.6 million top line IFRS revenue. And again, we're forecasted to reach 5 million in 2025. So you can see that growth was apparent through organic channels, but also through M&A. So we talked a little bit about the challenges coming to our world and the demand for electricity. So that's apparent. I think everybody would agree there's going to be a huge demand for energy, and that's where we're playing, is providing a solution for that energy demand. But why does a franchise model work inside the solar industry? Well, it's very clear and apparent from our standpoint, and it's because the solar market is fragmented in North America. Now, what I mean by that is right now you have lead generation firms that are out finding people who are interested in solar. And then they're selling those leads to sales organizations that are actually reaching out to these homeowners or business owners and closing the deal. And then those sales organizations are then selling the projects to installation crews that are showing up to do the work. Now, the big problem there is you have 3 corporations participating in the single transaction with the homeowner or the business owner. And each one of those companies is going to require a margin or a percentage of the deal. At Stardust, with our model, all of that is brought in-house and becomes operational expense at head office. So we have our own internal lead generation, we have our own internal sales teams, and our installation crews are actually our franchisees that invested in us and bought a local territory. The end result is we're extremely competitive in all markets in North America based on price, which is usually the determining factor for business owners and homeowners. So let's talk a little bit about why someone would want to become a Stardust franchise. Why not do it on your own? Now, there's a lot to go through on this slide, and I'll go through it fairly quickly. But the first thing you get is you join a public brand. You become part of Stardust Solar. So instead of having to start in your local market and create brand awareness or a website, you're literally jumping in with a brand that's been in business for 10 years, is publicly traded, and has a reputation. So you get the brand, you get the marketing and lead generation, which essentially is our internal marketing team managing the campaigns for the local franchisees. So that business owner doesn't need to worry specifically about those marketing efforts. Furthermore, certified training. This is a big component of our business, and I'll talk more in a slide or two, but the certified training that we offer to the franchisees gives them comfort and actual certification in the field of solar installation, but it also reinforces to homeowners and business owners, you're dealing with a brand where everybody is certified and trained to install. Partnerships. So we've been in business for 10 years. We negotiate on behalf of 102 franchise territories, and we buy in bulk. That allows us to create significant partnerships, and we pass those partnerships on to our franchisees. So a local person who would be starting their own business would have to start from scratch on all that. By buying into our system, you automatically get all of our contacts. Proposal generation. So this is a big service we offer the franchisees. We do all their quotations, their quotes, their proposals. All they have to do is send in raw data about their client. So that's a utility bill, maybe a few pictures, description of the rooftop. We're then able in 48 hours to give that franchisee two proper proposals to present and sell. It saves them a huge amount of time instead of having to do it themselves. Engineering plans is the next thing we do for them. So once a client decides they want to buy from, a franchisee, there's going to need to be a proper stamped engineering drawing, verifying snow loads, dimensions, everything to scale. It's a big document, and that would take them hours to produce. In our system, once they get their signature, we have engineers that internally create those documents and prepare their permit packages for them. Again, saving them time, letting them focus on what they're good at, their local position, which is the installation work. Furthermore, we offer customer financing. So if anybody in their system doesn't have the ability to pay with cash, we have banking solutions to give the homeowners or the business owners financing. And finally, supply chain and logistics. It's probably the biggest service we offer. We have distribution network across North America. And when you buy into our franchise system, you don't even need a warehouse to run a Stardust franchise. We will literally drop ship all the equipment for each project directly to site and send the packing slip and instructions off to the franchisee, who then in turn shows up and executes the installation. So there's a lot that goes into buying a franchise. But how do we make money? How does Stardust Solar head office make money in our business model? Well, three ways primarily. The first is franchise fees. So we charge $50,000 for a franchisee to buy a region or to buy a territory from us, which is exclusive to them. So it's $50K up front and a 5% royalty in perpetuity on top line revenues. Now, all of that money, all those franchise fees are 100% gross margin. And it represents, I want to say it's probably about 20% of the revenue pie. The second way we generate revenue at head office is education and training. So this has become a smaller piece of our business. It's where the company started, but today it only represents 10% of the revenue pie, but also high margin business at 80% gross margin. And then finally, products and services. So products and services represents 70% of the revenue pie and operates at a blended margin of 25% across all SKUs. So the gross margin there is about 25%. When you put those three avenues or veins of revenue for the company, you get a business that's going to hit 5 million in revenue this year and operates at a blended margin of 40% or more gross margin. Okay, so let's talk quickly about education. Training, compliance, education. So the reason I focus on this is two things. One, it's actually the genesis of our company. So when Stardust began 10 years ago, we did installation work, got on the roof, dug the trench, we experienced project work, but quickly we realized we needed some kind of a niche inside the industry, and we created Stardust Solar Training and Compliance. Essentially, we took the National Electrical Code, Canadian Electrical Code, and we created a 7-day boot camp or a 7-day workshop on how to install solar and compliance. That quickly became accredited not only in Canada by CSA, but in the US by NABCEP, and we built an entire business around that. And it still operates today. However, during COVID, it became, almost impossible to run classes and workshops. And that's where we dreamt up the franchise idea. And it turned out that the franchise model was very scalable, which led to the public company we have today. But what I want to highlight is we still have that core competency and training and compliance. We have third-party accreditation. And the most important thing to recognize is any person or any company that's going to come behind us and try to copy our model is not going to have that accredited training for their franchisees and for all of their clients. So it's our key differentiator. I talked a little bit about partnerships. One that we're very proud of is Tesla. So we're one of Tesla's largest distributors in Canada of the Powerwall and the Powerwall 3 specifically. It's a great partnership. It's a very well-known brand. And I have to say their technology is the absolute best in the industry. Now, this does a few things. One, it offers a premium product to all of our clients. Two, it creates credibility for the franchisee now that they're not only representing Stardust, but they're also able to represent Tesla in the field. So there's a lot of credibility that comes behind the brand association and the partnership. And this isn't the only partnership we have. We have many others, but it's one that is our flagship and I'd like to highlight today. System-wide sales. So maybe something a little bit more tangible for the discussion is, our sales numbers. Now, I want to be very clear about one thing. System-wide sales does not equal IFRS revenues at head office. This is the sales that are happening throughout our system. So you can see here in Q2, we had a record quarter doing $2.5 million in sales in the quarter. And what that means is those are signed contracts. So $2.5 million worth of signed contracts in our system that adds to the backlog of work. And then we back that up in Q3 with another 2.4 million in sales. So the sales have been record breaking at our company. And you can see here, just by the end of Q3, we had reached just about 6 million in system-wide sales, and we still have the fourth quarter to add. I'm also happy to report our current backlog is over $4 million in projects that'll spill into and turn into revenues in Q4 and into Q1 and Q2 actually in 2026. So what are we looking at for 2026? What's the forecast? Where are we going? It's a growth play, and we'll talk a lot about that. All the dollars that get put into investment in Stardust Solar go into growth initiatives. So we add staff, add team members, grow our departments, and we market and we advertise. So we're either advertising our products and our services, or we're advertising our stock and promoting it to our greater network. But it's really always going into advertising and growth of staff. So it gives comfort to investors to know, we're not spending on R&D, we're literally going into growth initiatives. 2025, we are going to finish just around 105 locations. 2026, we're looking to get over 150. We've also done an internal analysis. If we get to add 25 to 50 territories in 2026, we should be able to hit 7 to 8 million in top line IFRS revenue, which puts us into EBITDA on the entire year. Our Q3s, which came out just a week or so ago, they were really good, and we were break even on the quarter. But getting just a little bit bigger will push us into EBITDA profit on the entire year. Moving forward to the corporate team, don't have to spend too much time on this slide, but would like to just focus on our board. Myself, Eamon McHugh, Vitaly, Paul, and Ohad. There's a lot of public market experience and industry-specific experience. So Ohad is CEO of a public company called StarMet Technologies. Paul Belush is a longtime executive who worked at 1-800-GOT-JUNK in the franchise world and is bringing his expertise to our company. Vitaly Melnikov, over 25 years experience in public market CFO, public CFO market experience in mining and different sectors, specifically on the venture exchange. Eamon McHugh, my COO, has 10,000 hours in solar compliance and also a master electrician. And then myself, who's a serial entrepreneur, had 2 prior exits before creating Stardust. Okay, moving on to the market cap. So really quickly, this price is still accurate today as of today's date, November 4th. We're trading at just about 10 cents. Market cap is just about $9 million, as Trevor said in the introduction, with 88 million issued and outstanding. One thing that I encourage you to go look at our recent financials, we have just about $200,000 in total debt on the company. And the majority of that is from myself putting money into the company. So our balance sheet is very, very light on debt and clearly undervalued. Finally, last slide, and then I'll turn it back over to Paul and Trevor, and maybe we can take some questions. is the 2026 outlook. I mentioned the 8 million number. It's something I'm confident we can do, and we're going to get there through, three specific catalysts. One is we're going to continue to grow our franchise base organically. So as I mentioned a few slides ago, our goal is to get to about 150 by the end of 2026. And that's a really good KPI for any investors that are watching our story. Just watch the number of franchises grow, and you'll watch the top line grow and the bottom line get more efficient. Two, we're working on acquisitions, M&A, and we're currently looking at acquiring a business in Texas. I can't talk too much about this because it is still in discovery phase, but we do have an acquisition lined up that would add somewhere between 2 and 4 million USD to our top line revenues. Furthermore, we also launched our commercial project division in 2025, which was a big step forward for us. We sold a franchise in Temiskaming, Ontario, and that operator specifically had expertise for commercial projects only. So what we did is we brought that expertise internally and distributed it to our network. Now in 2026, instead of having one franchise doing commercial operations, we now have 10 out of our 102 that'll be able to go in the field and operate and go after commercial business. So when you bring those three catalysts together, along with just the organic growth of our business, we're confident we can get 7.5, 8 million top line revenue with a positive bottom line. And the last thing I'll leave that bottom line thought with is just the experience. I mentioned a few slides ago about how we've been trading for just about a year now, and we learned a lot in that year in terms of how to cut expenses and where possibly professional fees or legal fees were too costly. So by trimming the fat there and growing through our three catalysts, we're looking for an EBITDA positive 2026 with 8 million top line revenue. Thank you, everybody. That was my presentation. I'll turn it back over to Paul or Trevor, whoever wants to take over.
I think I'll take over. Thanks, Mark. Thank you for that. Reminder to everybody, if you got a question you'd like me to ask Mark, just use the chat function and we'll get that done here. I do see a couple questions in already, but I'm going to tackle my questions first. You've been public now for just over a year. You have to learn how to manage both a private business at the same time as a public entity like this. What would you say are your sort of surprises? What have you learned being a public company that might be helpful in running the underlying business?
Yeah, no, I appreciate that. Obviously, the expenses are dramatically different. I've been an entrepreneur for 15 years. Having a public company, just the legal fees, the audit fees, those things are, I'm going to call them, cumbersome on the profitability of the business. Mm-hmm. And I know that just from an operations standpoint, we're there already. But that was a real learning curve, was all the expenses that come with it. But I feel very comfortable that we've been able to budget and forecast, and we know what we're up against now. Some of the other things are just, personal time, speaking with, different parties, investors, making sure that they're always up to date and aware. I also like to make myself very accessible. So, the demand on time personally for a CEO changes dramatically. But I think it's important that investors get transparency and have access. So that's been another, learning curve. But then there's also a lot of positives, right? Where we can go to market and we can raise capital, which also, Paul, I should have actually probably mentioned at the end of my presentation. We do have a private placement open currently. And, I can send everybody the details on that, and maybe we could talk more about that. But point being, the ability to use the markets to raise capital, scale up quickly, and get market share is what gets me really excited about being a public company. It's why we listed.
Mm-hmm. Yeah, no, fully understand. That's one of the advantages of being a public company. Now, if I remember in your presentation, did you say that you have 105 franchisees right now?
So it's 102 franchise territories.
Yeah. Okay, gotcha. And what is the addressable market right now for you guys, as far as number of potential franchisees. You mentioned you're global, but maybe you can sort of substantiate that kind of number somehow. North
Sure.
America or where you're currently operating.
Yeah, no, that's a great question. So we have 61 franchise territories in the US, 39 in Canada, one in the Caribbean, Antigua, and we just opened one in Zambia, Africa, believe it or not. And there's a lot of expansion potential there. I love this question because addressable market, North America, we're looking at easily 500 to 1,000 locations just in North America. But we've been very pleased with these two international expansions because we've been able to prove that it can go overseas very easily. Really, what the requirement is going to become is somebody that has a local understanding of the electrical code and has a good, fluent English base so they can communicate with head office. The rest of the skills are all transferable. So I'd say, Paul, 1,000 in North America is doable in the next 5 years, maybe 10 years. But globally, you could do 50,000 locations easily.
Mm-hmm. That's amazing. Let's talk a little bit more about the industry now. Over the course of the last several years, we've seen different, changes in governments and, a lot of, I'll say the early hype in renewable energy is come and gone. When it comes to like government initiatives, what do you see out there right now? What's helping you? What's not helping you?
Sure.
What can you tell us about that sort of part of the business?
Yeah, it's actually a big part of the discussion. Here's what I would tell you. I would start by saying, we're very long on the industry. Okay. It's very slightly adopted. Like I said, it's like 5% adopted in North America today. And that number is going to grow dramatically over time. Now, politics swing left and they swing right. And some things, a hoax one day, and then it's the hot topic the next day. There's incentives that come and there's incentives that go. And that's actually what we're feeling. So there are some headwinds in the US, just to be transparent. And it's why we started looking outside to further grow our business. But the truth of the matter is, it's the solar technology that's become so cheap and it's so simple. The concept of putting solar panels on a roof on any building and the sun comes up and that's all you need to power and create energy independence at the building level. That's what's going to drive the technology forward. It's kind of like the cat's out of the bag, if you will. Everybody knows about solar. Everybody knows it works now based on production. So even with the loss of an incentive today, there'll be, plenty of opportunity based on the economics. Last thing I'll say about that is our backbone of our company is in Canada. I would say 80% of our revenues are coming from our Canadian franchisees. It's the strength of our company is our Canadian backbone. And in Canada, they're moving away from federal incentives, but they've distributed them to the provinces. And in many cases, the provincial benefits are better than what was being offered at a federal level. For example, in Ontario, you can get $5,000 cash back today for putting solar on your roof, and they'll give you $5,000 cash back for putting a battery in the building. So the opportunity has shifted from federal to provincial, but in my opinion, it's improved in Canada, whereas in the US, they've pulled back some of the tax credits starting next year.
Mm-hmm. Now, obviously, we saw that you're also selling Tesla products as well. How much of the business is literally not solar products, and do you see that type of ability to offer other ancillary products like that? Do you see that as a trend going forward?
Yes. And so today, I would say 20% of our revenues from products and services is energy storage, and 80% is solar. Okay. But that number was 10% just 1 year ago. So our energy storage product line is definitely growing the fastest. And also the concept of energy storage is terribly important for, again, the energy demand crisis that we're going to see going into the future. Once you put batteries inside of a building, that building becomes energy independent and can operate independently of the grid. It's a terribly important concept, and we're definitely focusing on both solar and energy storage. And I see the energy storage market continuing to grow at a faster pace than solar, actually.
Mhm. Mark, give us an example of the typical franchise or franchisee. I get
Yeah,
them mixed up.
that's it.
Is this a small operation? Is it a large operation? Is it a family operation? I imagine it runs the gamut, but what's sort of the sweet spot? What's the sort of the ideal franchise member for you?
Yeah. So, we have all walks of life in our franchise network. Definitely, I can say with confidence, the ideal is an electrical contractor who wants to add solar to their business. That works very, very nice because they have the electrical expertise. They don't need to go outside their business, their existing business, to do the electrical work. And let's be frank, you need to have a proper electrician doing any type
Mhm.
of solar project. But we also have entrepreneurial types that want to get into renewable energies. And they see this as a really great way to start a small business in solar and have the backing of a brand. And also, general contractors and builders are really good franchisees. Home builders and developers that instantly have access to thousands of homeowners that might want renewable energies on their building make great franchisees. And what we see is they'll put a system, they'll put a Stardust system on the sample home, and they'll make it an option for home buyers coming into the neighborhood as an add-on that they can roll into their mortgage. So those are really the three primary franchisees that we get.
Mhm. Gotcha. Um, and the a big part of what you do is marketing on behalf of your franchisees. Give us a sense of that kind of spend. Like I keep thinking that at some point you get your brand out there. Your customers know you a little bit better.
Hmm.
When does that marketing spend become less important um, as part of the overall sort of expense line? I mean, I'm just trying to get a sense right
Great
now.
question.
How much do you guys spend in marketing on behalf of those franchisees?
Yeah. So, the answer there is probably about 200,000 a year right now. Okay. But it's proportional. So what does that mean? We actually built it in. So the 5% royalty that I talked about in the
Mhm.
revenue generation slide is actually 4% plus 1%. So 4% is revenue for head office. It's how we keep the lights on. The
Mhm.
1% is an advertising pool where we reinvest it back into the franchisee's territory
Mhm.
through digital marketing. So the larger they grow their franchise, the bigger their 1% pool becomes,
Mhm.
and they get more attention from a digital marketing standpoint. So it's kind of a carrot and stick type of situation where we're incentivizing them to grow and we're fueling them with more ads and more leads.
Mhm. Okay, so you answered my next question is exactly what kind of advertising you typically do. So there you go, digital. That's fantastic. Okay, so you mentioned a financing that you currently have open. Maybe give some details, terms, things like that that you can.
Yeah, no, thank you. And I wish I should have, led with this or mentioned it earlier, but thank you for asking the question. Yes, we have a private placement open for a total of $1 million. Happy to say 48 hours into it, we've already sold 500,000. So half of the placement is already booked. It's a very attractive financing. It's 10 cents per unit, and each unit comes with one common share and one full warrant. The warrants are at 15 cents and they're good for 18 months. So again, 10-cent unit, you get one full share with a 15-cent warrant that's good for 18 months.
And what's your use of proceeds? How are you going to spend that money?
Growth initiatives. So there will be some dedicated to IR, developing the stock. I would say probably 25% of that budget will go towards the 2026, IR and promoting and traveling and doing the conferences. But primarily, it's going to go towards staffing and marketing. It's a very common expenditure for us. So we will pour money into growing our engineering team, into growing our sales team, maybe adding another body in the finance department. And that'll allow us to scale up the operations to meet the demand of those 50 new franchise territories we want to add in 2026. That'll allow the revenues to grow. And then obviously we'll keep 25% for contingency or, for, reserve fund. But this 1 million in financing carries us well into 2026 and allows our operations to stretch, I would say, right until fall of next year. So our company is cash flow generating. We're very light on debt, and these financings go a long way to growing the business. Again, no spend on R&D here.
Mark, running the business, what sort of keeps you up at night? What's the greatest challenge business face?
Oh, there's a lot of things, but no, joking aside, it's one of these things where there's uncontrollable forces that give us headwinds, right? We talked a little bit about politics and things that are just completely out of our control. It's somebody coming out and discouraging renewable energies for a political reason, and then that creates headwinds in a market that we're investing into. It creates challenges, and those are the things that keep you up at night. I think it also changes people's perception for a short period of time until the next message comes out, and then people are back on it. But it hurts us from a client basis and also from an investor basis. But the ones that really look at solar technology, how simple it is, and how valuable the concept of energy generation at the building, see the opportunity. And then once you look at the demand and you do the math on where we are today and where we're going to be 10 years from now, there needs to be a solution to bridge the gap, and solar is the perfect solution.
Gotcha. Perfect. Well, listen, let's tackle some of the questions that have come in from the audience. And I'm going to start with Justin. Justin says, do the franchisees also sell or just install? Do they actually go out and, I mentioned there's nothing stopping them from going out and getting customers.
They do. They sell all day. So from a marketing perspective, they're doing all the local sales. So trade shows, going out and meeting people, radio ads, billboards, whatnot. So they're doing all the local sales, and we'll do all the digital at head office. And just to dive into that a little bit further, they do sell the equipment as well, right? So we sell it to them, and then they sell it to the homeowner, and they're the ones who are collecting the money from the homeowner, not head office. So we don't ever touch the funds. And it's also important to know that the franchisee signs the contract with the homeowner and takes the liability. So those homeowners become the franchisee's client. The franchisee is selling to the homeowner, and then they're buying from us as per their contract, and using our brand and driving the business forward.
Is it predominant? Yeah, no, that's perfect. Is it predominantly electricians and sort of electrical contractors that are taking on these franchisees? Because I can imagine they're able to upsell other services in that case than just solar and battery storage.
Yeah, I mean, a lot of them are electrical contractors. Like I said, it works very, very well. It's not a mandate though. So let's be clear. Sure. You could be, any walk of life and want to get into solar, and we will give you the blueprint. You get a business in a box for how to do this business. You get the whole head office to support you for engineering, and you can just subcontract a local electrician to do the electrical work. So it works without it, but yes, that is the ideal franchise for us. And the good thing is electrical contractors are plentiful in North America.
Yeah, no doubt. Okay, question in from Curtis. He says, is there more Tesla products coming to the company? For example, Tesla solar roof panels, any other exciting new products in the pipeline for 2026?
Who is that, Curtis, you said?
Curtis, yeah.
Okay, thanks for that question, Curtis. There is, and I have to be careful about, forward-looking statements, but yes, we do have access to other products. Yes, our franchisees can offer the Tesla solar roof in specific regions where we're able to do it, and they have to have specific qualifications. But we are closely partnered with them. I'll tell you another really quick thing that we do out of our Sudbury franchise. We actually do marketing campaigns in conjunction with Tesla. It's called Rideshare. So right now, if you go to our franchise in Sudbury, there's 2 Teslas parked in front of the Stardust office there, and you could walk up there with your phone and unlock the car and take it. It'll take you for a test drive on autonomous driving, take you to a charging station, ask you to charge the vehicle, and then bring you back to Stardust. So this was something they approached us with. The partnership continues to grow. They know that we have, a quality brand. So we do marketing initiatives, we do products, and yes, we have the ability to sell other Tesla products as well.
Fantastic. Okay, next question comes in from Paulo. He says, what's the EBITDA percentage of revenue expectations going forward?
Okay. Well, a little bit of a loaded question, and try to not shoot myself in the foot here, but I'll start by saying the best franchise in the world is McDonald's, and that company operates at 18 or 20% EBITDA, on billions of dollars. So, will we do that tomorrow? No, but I do think in 2026 you will see a positive EBITDA on the year end. So we achieved a 1% EBITDA in Q3 that was isolated for Q3. In 2026, entire year, we're expecting to have it. I think, Paulo, you could say safely in the next 3 years, we'll get that to 5 or 10% EBITDA while continuing to scale up revenues. I very easily see us being over 20 million in revenue in the next 3 years with a 5% EBITDA. Very attainable.
Mm-hmm. There's clearly some seasonality to this business, right? Maybe describe a little bit of that.
Sure. Yeah. So, we just finished Q3, which is obviously our busiest in the field. It's when we're operating, completing projects, doing installation work. Q4, it starts to taper off a bit. So what you'll see in Q4 is when we want to add a lot of new franchisees. So Q4, Q1, we're adding to the system and we're training them and we're getting them up to speed. Q2 and Q3 are more in the field operations engineering. So there's less of adding to the franchise pool.
Gotcha. Okay, next question comes from Curtis again. He says, is there a path to profitability in self-financing? I imagine that's obviously a goal, is to get to profitability, but at what stage do you think you're in a position where you're potentially self-financing and not needing to go back to market?
Yeah. So again, tough question, but I do like it. There's something really unique about a franchise model, which makes us valuable, and it's why they work. When you go out and sell 10 franchises at 50,000 a piece, you're essentially raising $500,000 from 10 investors that are buying into your system. Now, there's no operational cost or direct cost on that, but we're going to turn around and need to train those people, invest in them, get their businesses started. So, financing essentially without dilution or selling equity is possible by selling a whole lot of franchises. However, if you're asking me when the model becomes self-sustainable and we just don't need to go back to market unless there's a specialty project, again, that's my goal by the end of 2026, is to get us to a place where the entire operation is just profitable off of operations, and then financings are only for specialty projects or growth initiatives.
Mm-hmm. It sort of lends itself to the next question a little bit here. The financing you currently have in place right now, do you see that being enough to get you to that point where technically you don't have to go back to the market?
Yeah, I hope so.
Mm-hmm.
It's going to depend on a few factors. One is going to be how many franchisees can we add in Q4 and in Q1. So if we do a really good job of selling a whole bunch of franchises in those 2 quarters, then yes, definitely this financing plus any existing warrants that'll come with it will be more than enough. We won't have to go back to market. And this is why I said, the key KPI for investors is really easy on our business. Just watch the number of franchise territories. As long as that's expanding and growing significantly on a quarterly basis, the model is getting bigger and we're self-funding ourselves. Do I want to say that we'll never need to go for a financing again? I think that would be irresponsible of me to say, but I do believe if we close this million, we do a good job of selling franchises in Q4 and Q1, and we get those warrants exercised, there won't be a need for another financing.
Mm-hmm. Gotcha. Okay, question from Jeremy. He says, do you have figures of system sales and growth over time? And secondly, are most of the franchisors full-time businesses?
So the classic, so there's a minimum. So the minimum requirement in our system from a franchisee is $250,000 in top line revenue. So that's the minimum, or we can take the territory back and sell it to a new operator. The standard or the average is right around, I want to say 400 or 500,000. And our high end ones are doing over 2 million. And then obviously we have some that are not producing. And that's a problem. And that's where we take those territories back and we put them on the market. And another little piece of clarity here, it's a classic business model where 80% of our revenues are coming from 20% of our franchisees. And it's like anything else, we're talking about being an entrepreneur when you buy a franchise. Not everybody is going to succeed, but there is proven data that buying into a franchise system heavily increases your probability of success versus doing it on your own. That's a little bit of a tangent, but I hope that satisfies the question.
It does. And again, next sort of leads to the next question. What is the average sale per franchise? I mean, it sounds,
So
well, I think you covered it. I think, was it $400,000 that you
yeah,
had said? Yeah. Okay.
389,000.
Yeah.
380,000 is the average across
There you go. Perfect. Okay, second to that question is, what is the average cost to install solar panels per home? Maybe give us a sense. I mean, obviously all homes are different, all installations are different, but is there sort of some sort of metric that we can work off of?
Yeah, you know what? I want to just touch on the last question. One thing that's really important, if you don't mind, Paul. I think
Sure.
it's really important to clarify to all the listeners and the investors. I want to make sure that they understand. So we have 102 franchise territories. That doesn't necessarily mean 102 entrepreneurs. We have a lot of our franchisees who buy multiple territories or who own many. So we have actually 39 franchisees, humans, or 39, 40, we're just on that cusp, and that represents 102 franchises. So there's an average there. I just wanted to clarify that.
Gotcha. Gotcha.
Yeah. So, and then moving on to the home installation question. So I think you were asking me what's the average cost of a system
Yeah.
installed on a home. So in Canada, that number I can tell you specifically is $33,000 on average in urban, well, I'll say suburbia Canada. 33,000 is the average number for an installation.
Gotcha. Perfect. Okay, Jeremy says, can you explain why the acquired companies joined Stardust? What makes private companies want to join your company? Thanks.
Yeah. So, well, the fact that we're public is enticing, right? So anybody can see that there's a stock-based compensation, and it's great for us because we use the stock as currency. And then we're all in this together to continue growing. And you can make a nice multiple on your business and you can get liquidity on your shares. I mean, I think that's why everybody comes to the public markets. But there's a deeper reason, and I take it as a real compliment to our business model. We are unique. Okay. Our model, nobody else is doing what we're doing. It's also why we're a great investment. The fact that we have these internal resources, the training and compliance department, none of the other franchisors had that. So they would be onboarding these franchisees and literally not be able to certify them or train them. And they'd have to go outside the system to get that training independently. So that's a big reason that franchisors want to be acquired and join us. Two, it's our internal staffing. So our engineering team, the ability to do the project plans, the quotations, this is stuff that other franchisors don't do. And then three, our supply chain. We set up supply chain. So our system is significantly more sophisticated than the existing franchisors. And I don't mean any disrespect to them. They've done a lot of great work building their brands, but this is now the second and even the third franchisor that's heard about our M&A roll-up strategy and have approached us now to make a bid.
Gotcha. Okay, question from Jills. He says, how much revenue or how many sales must a franchisee achieve to break even?
Okay, so to break even, I'm guessing he's talking about on their investment.
Yeah, I guess on their operations, like, and
Yeah, so
these are entrepreneurs are going to have different expenses, how they run their business.
That's what I was going to get at. It varies wildly, but
Yeah.
here's some real back of the napkin calculations for Jill. So Average installation, let's say it's we said 33, just call it 35 for easy math. Okay.
Yeah.
The franchisee will make 20% net on that installation. That's after he pays all the field workers, the materials, the permits, pays everything. He'll take, he'll take 20%. So that works out to $7,000. So 7 times 7 projects is 49,000, and they're investing 50,000. So the really, short back of the napkin calculation is 7 jobs. That's it. That's all a person who buys a Stardust franchise needs to execute to get their money out through their profits. Now, like you said, Paul, it varies greatly based on the operator and how efficient they are.
Yeah, no, clearly. Okay, another question from Justin who says, who is your typical franchisee? We may have covered that already. Do they only install solar, or do they have other construction type companies, and adding solar as a new product line? It seems to me that that's the more likely franchisee, is just that. Somebody who's already got another business that's related, that can take advantage of this additional revenue.
You're 100% correct. I think you answered the question for me. It's a bolt-on.
I'm getting good at this. Yeah.
You've heard it a few times, I guess now, Paul. No, but it turns into a bolt-on for existing contractors that works really, really nicely. And, the second these contractors try to get into solar themselves, they realize it's its own trade, and it's its own domain. And that's why they come to us for training and expertise. And it works really, really nicely because not only the experience maybe from an electrical contractor, but understanding, permitting with municipalities, there's a lot of overlaps. It works really nicely that way.
Yeah, gotcha. Perfect. Okay, this is a general question, I guess, on the product. How much of the energy generated by the solar panels are consumed by the homeowner, and how much is sold back to the energy grid?
Okay. So I think I understood that question. So, it's usually what we want to do is get a homeowner to 100% offset. It's not going to happen every time. There's a lot of factors that go into this stuff. The amount of available roof space, the angle of the roof, the orientation of the roof, or a field or what have you. And then also you have the climate of where that specific building is. The solar irradiance or the solar resource is going to vary wildly depending on where you are. So all these factors come into how much energy is the home going to use and how much is going to be sold back to the grid. But in an optimal situation, we want to put just enough solar so that a homeowner is going to get like 105% offset to what they use in a year. So just a bit over what they would normally be using to make sure they hit that threshold. An important concept to remember is you're earning credits through net metering. So let's say you're not home and you go away for a month to Cabo in Mexico and it's super sunny while you're away. All of that energy is just getting sold off to all your neighbors and sold back to the grid. And the utility is giving you credits on your bill. So when you get back from vacation and you turn all the lights back on, you have credits on account. So we love getting people to 100% offset. It doesn't happen all the time. It's really project specific. I hope that answers the question.
Oh, that is definitely very helpful. I appreciate that. Okay, Russell says, what is the average dollar a homeowner makes selling back to the grid? How much for the franchise? And what does Stardust make? I mean, does any of that revenue go back? I don't think so. Yeah.
I want to go on this question. I'm not going to, not yet.
Yeah.
But we do have some really big things coming next year that are going to touch on that. I think he's talking about power purchase agreements. And we are going to be exploring into that with our business model. No real comments that I want to add there, but it is going to be, a big development for next year. So what really happens now is we set up a contract with the utility and the homeowner where anything they produce becomes a credit on their bill, and it's 1-at-1 par. So for the same price you're buying, same price you're selling. So if it's 13 cents a kilowatt hour that you're paying, the utility will pay 13 cents right back. However, it comes down to the provinces or to the utility. The only place that comes to mind right away where it doesn't work like that is Saskatchewan. Unfortunately, Saskatchewan, they pay you at half of what they charge you. but the rest of Canada, to my knowledge, is at par.
Gotcha. Gotcha. Okay. Another question from Gilles, who says, from who do you buy the solar panels? China, question mark. And then, of course, tariffs. Let's talk about your supply chain a little bit, and then let's talk about the impact of tariffs.
Okay. So first thing to realize is we have distribution points all over North America, right? And we work with wholesalers that are importing. So it's not Stardust that's doing the import, and that's by design. We don't want the overhead of massive warehouses on different corners of the continent. We have partners that do that for us. It's their overhead, it's their lease, but we commit with POs to buy from them preset amounts on every quarter. So we're able to buy containers, they break it down, and they distribute it on behalf wherever we tell them to send it. So send it to Red Deer for this franchise, send it to, Ohio for this franchise. So we manage the supply chain and logistics, but it's not actually landing at our distribution point. And we're working with wholesalers who are buying in bulk and selling to us. Now, the China question is, yeah, a lot of equipment is manufactured in China, and that's honestly where the most economical, efficient solar panels are coming from today. In Canada, that's no issue. In the US, we buy a lot of Korean product, and there is also American-made product in the US. It's just not as good of a quality. It's a tier B, but it is actually available, and there's stuff made in Mexico as well. So the tariff question is an interesting one, but we don't get affected with Canada-US cross-border tariffs. I'll tell you why. We have two separate corporations. There's a corporation that's in Canada, and we have a corporation in Las Vegas in the US, in Nevada, that does all of our US operations. So the two companies operate independently, and they're both owned by the public company, Stardust Solar Energy.
Fantastic. Okay, great. Next question we have from Jeremy. He says, when do you expect business to be cash flow positive? I think you said you're looking at that sort of the end of 2026. Does that make sense?
Well, Q3 was cash flow
Okay,
positive.
okay, right.
So I would tell them, I think we generated 131,000 positive cash flow on Q3. So it's a scalability issue. So, a lot of people want to know this question or have this question, I would say. In terms of profitability, cash flow positive situation, we just need to grow a bit more. And that's why we're raising the $1 million. We go out and get this money, that'll turn into growth because we spend it on growth initiatives. And every single franchise in the world gets more profitable the bigger it becomes. Because you don't need to add 50 engineers to manage 50 new franchises. But now you have 50 new entrepreneurs that are out in their local regions selling your brand, selling projects, and maybe we only have to add 3 new engineers to manage that. So it's an economy of scale. We're very, very close. If you look at classic franchise, theory, 100 territories or 100 units is a massive milestone. And I think only 5% of franchise systems ever get there. And once you keep scaling it, it turns into a flywheel of profitability. So the larger it gets, the more profitable it becomes. 150 franchise territories, that's the number. We'll cross into EBITDA, and it'll be sustainable going forward because we won't stop growing there. We will continue growing. We could take this thing to 50,000 locations. It's endless how big we can make.
Mark, how should somebody value this business, and maybe like is there a number where you sort of consider the business as like what's the business worth? And by that I'm sort of asking you because you know the industry, you probably you've done an acquisition or you're looking at acquisitions. What should this be worth right now?
Yeah, and also there's people looking to acquire us as well. So we've been approached by a few large franchise conglomerates about what we're doing. And, they're very interested because the franchise model works extremely well in the home services space. It's why there's Mr. Rooter, Mr. Electric, Mr. Weed Eater. There's all these different home service franchises, but there's not a lot of renewable energy franchises. So again, being unique, we get approached for acquisition. What do I think the company's worth? I mean, conservatively, I think we're at least double our market cap. So I think we're a $20 million company. If we're doing 5 million top line and we're projected to do 8 million next year, that's 2.5 times forward revenues, which I can tell you is what the acquiring parties would pay. We've actually seen as high as 6 or 8 times top line revenues for home service franchises. And we have documentary on that. We have internal analytics. I don't want to get into it too much because it's a very subjective topic. Everybody has their own valuation metrics, but you could easily say five times top line and no one would scoff at that.
Gotcha. Mark, you've got a number of initiatives that you're sort of working on right now. What gets you the most excited? What sort of go forward initiative gets you going?
Yeah, there's a lot. And again, I try to be careful on the go forward statements, but this expansion into Africa for me is something exciting. We've done work in Africa before, by the way. So I was talking about how we were a training compliance company for the beginning of our business. We still do annual training in Lagos, Nigeria, to a group of 100 engineers there. Teach them about
during the civil rights movement.
The Zambia franchise.
So, Mark, hold on one second. Will, just so you know, your mic is live.
Black America.
Will, there we go. Perfect. Sorry, Mark. We'll fix that.
No problem. I think that the expansion into our international markets is exciting. Also important from a humanitarian standpoint. Africa needs alternate sources of energy desperately, probably more so than anywhere in the world. So being able to give them power plants to distribute to their people, you feel like you're actually doing something that's, helping humanity. So that's really important. There's a really big economic opportunity there as well. A lot of people are looking to invest there. You can go even multiple countries in Africa are going to require some kind of resource for energy or supplementary resource for their grid. And it's something that approached us, not that we went after. So that's why I find it terribly exciting. I think you're going to enjoy the Zambia expansion as we develop it, and we'll keep everyone closely updated in the news.
As investors watching the business right now, apart from this project you just mentioned in Africa, what do you think are the other catalysts, or maybe just the metrics? You touched on franchisee growth, but are there any other catalysts or metrics we should pay attention to?
Yeah, the expansion into commercial markets is also new for us in 2025, right? So we really see an opportunity there. Now, I want to be very clear. The residential market, that's the bread and butter of the business. That's the backbone of the company. The Canadian residential market is where we're making the majority of our dollars. But expanding into commercial gives us a whole new avenue of different projects that we can approach. And the exciting part there is business owners are getting incredible ROI. We didn't talk too much about ROI, but when we were doing the study on that $33,000 install for a homeowner, they'll usually get their money back for the solar, the 33K, in about 7 to 10 years, okay? Based on the savings that they get from the electricity. The business owners, we've discovered, can get their money out in less than 5 years on their investment. So for a business that owns a building, they install solar, that array, that solar power is guaranteed for 25 years, but you get your investment out in 5 years, and then you have free energy. A lot of these businesses, their workshops or their storage unit facilities is a great one where the biggest expense is energy. It gives a really good value proposition. So the commercial part gets me excited. The global expansion is terribly exciting. The stuff that we're doing in the Caribbean, there we actually have a warehouse. It's extremely expensive for energy in the Caribbean, but it's sunny all day long, similar to Africa, of course. So there's a lot of opportunity there. And then finally, the M&A. These M&A opportunities that are coming in, keeps me busy. There's a lot of opportunity, but it keeps my lawyers busy too. They love that.
Yeah.
But no, joking aside, it's fun to explore these partnerships, find good acquisitions that we can get for cheap right now, especially in the US. We're getting it at 25 cents on the dollar because the market's a little depreciated. And I see it as buying good assets while they're cheap and preparing for, again, the next 10 years of growth in solar. So yeah, a lot to be excited about, Paul. I could do another presentation on that if you'd like.
We'll get you back on that at some point for sure. Okay, so listen, appreciate this. This has been great to get everybody caught up in terms of the business. If there's a key takeaway, what's a key message you want to make sure everybody walks away with today?
Yeah, I think the key takeaway is the demand for energy that's coming. And that's the case study for our business. It's undeniable that this entire world is going to need more production of energy. The classic way is still going to have a home and probably be producing most of that. But rooftop solar is the ultimate solution to create energy independence at the building level. That's the real solution for the problem that's coming. So right now, it's like you're looking at a market that's in its infancy and that's going to grow. There's a tsunami of demand coming for rooftop solar. People just don't realize it today. So from an investment standpoint, you could look at solar as a huge emerging market for the next 10 or 20 years. And when you find a company like Stardust that's severely undervalued, but extremely unique, you can add a very a profitable business. We're planning to be profitable. That's unique in its sector and is part of an emerging market. So I think I would leave investors with the thought that there's a lot of value in a Stardust stock, and there's a lot of good being done at our company as well.
Fantastic. Mark, appreciate that. We've been speaking with Mark Tadros, CEO of Stardust Solar. Symbol again is an easy one to remember, SUN, Sun, on the Venture Exchange. Mark, thanks for joining us today and look forward to the next time we can chat. And more importantly, as you mentioned, you guys have a financing that's underway right now. If there's anybody interested in learning more about this financing, how best can they reach you?
Yeah, really easy. My email is Mark, M-A-R-K, at stardustsolar.com. You can also email investors with an S at stardustsolar.com. Yeah, we have 500,000 left on the private placement. We'd love to welcome any of your listeners. It is going extremely quickly. We did the first 500 in 48 hours. So please, if you are interested, email me today, email me tomorrow. Let me know how much allocation you'd like, and I can hold that for you.
Perfect. On that note, Mark, thanks again, and we'll catch you next time. Bye for now.
Thanks, Paul. Appreciate it.